Everybody, this is Jim at SP500chart.com. It's a little bit before 4 o'clock on Sunday afternoon, April 19th, 2020. We're going to take a look and see what happened in the S&P 500 for the week ending April 17th. First, I need to remind you the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Starting out first on a weekly chart, each one of these candles is 1 week of trading. There you see there's that big turnaround week we had the week of the 27th. Third, we were down a little bit, but I think that might be sort of a little kicker. And then we had a nice week before last, and some continuation this previous week. You can see, however, that the trajectory that we had and the velocity that we had 2 weeks ago, that has tamed a bit in the past week. And if we look at things on a 30-minute chart, you'll see exactly why. There you have it. We're looking at what might be a rising wedge. And obviously, when you're earlier in the wedge, you have much more velocity. As you work your way more out into the wedge, everything sort of gets clamped down. And here's what happens. You end up with smaller moves that take place in a shorter period of time. Now, this would not be a confirmed rising wedge until we break through this line of support here. It is still possible that we break out over what appears to be a line of resistance. That could happen. So that's why you have to just kind of keep watching these things and be ready to I guess the best word I could say is be ready to shift gears if you need to, especially with all the volatility that we have in the markets right now. So there you have where we closed. We closed back in that pink zone. If you've been around for a while with the site, you'll know that this was the area where when we were looking at an inverted head and shoulders pattern here, there's the head, there's the right, well, let me just scoot this over here. There's the pattern, this is the neckline, and we broke out. Then coronavirus slammed us way down, and this pink area here was the area at which we start to give up hope on that pattern. We are back in that pink area, but that does not mean we restore hope in it. In order to see this thing come back, well, I don't know that it really is possible to have it come back, because we got all the way down to 2200, and that was significantly lower than the inverted head back here. But in theory, the only way we could entertain that we're back into a really bullish scenario would be if we break out over this neckline again. Just getting up to that neckline, that's no big deal. That's not going to restore, at least for me, that's not going to restore my faith in that 3840 target. So now let's go back to the 30-minute chart again. You can see, again, it looks like maybe a rising wedge. The week ended on a nice up note. We'll see what happens. Futures are going to open here in a little bit more than 2 hours. We can maybe get a little bit of a gauge of things then. I think, by the way, I'm going to switch gears here, talk about coronavirus just a little bit, because that's the reason all this happened back here. There's more and more evidence mounting that leads people to believe that the coronavirus spread might be a lot more than what we know about. And you might think, well, that's bad news. No, actually, that's good news. And here's why. The cases that are confirmed are those that have gone to hospitals, that have gone to doctors, and they've been tested. Okay? What I'm saying is that there are some parts of the country where they think that that's just a small portion of the number of people who have tested positive on an antibody test. And what that means is, where at one point they were saying a 4 to 6% mortality rate, then a 2% mortality rate, then a 1% mortality rate, chances are by the time it's all said and done, and when we find out the extent of everyone who has been infected, including those that don't even know they've had it, that mortality rate is likely to be less than 0.5% or even lower. So that's good news. That's a little bit hidden, however, so just kind of keep an eye on that. It's not certain yet, but where they've done random testing, like for example in an area of Massachusetts, they took 200 people pretty much at random off the street, and they tested them, and they found that 1/3 of those people had been exposed to the coronavirus. It may have been a few false positives in there, but what that means is, hold on here, 30% of the people who've been exposed, well, guess what? In that particular town in Massachusetts, their case rate was 2%. As far as an epidemiologist is concerned, that's actually a good thing that 30% have been infected, while only 2% have shown up to doctors to be tested. So, that aside, as the markets begin to get wind of this, I think we will continue to see upward momentum when things open back up on a state-by-state level. I think you'll get more momentum. But again, still watch this pattern, because if this is a rising wedge and we break down under this, there would be significant selling pressure. So, in other words, we could get a double dip. But look, if we zoom in a little bit more on the week, there you can see it. We started down on Monday, gapped up nicely on Tuesday, gapped back down on Wednesday and Thursday, and then gapped back up on Friday. And to me, this looks like, I don't know, we'll see. This looks like what do you think? Do we go gap up, gap down, gap up, or do we go gap up, gap down, gap up, gap down? I don't know, but the general feel I get here is that we could start the week off positively. Here it is, almost 4 o'clock. Watch that be famous last words. The final thing I want to show you here is just to remind you that I'm still considering this as a cup and handle pattern right here, and that does have a target up around 3170. So the only thing that I think would remove that would be if we break down underneath this line at some point before we get there. So guys, that's it. It was a nice week, continuation. We've now been about, not quite, but about a solid month. Not quite a month, but close to a month of gains since hitting that low back on the 23rd of March. So, I'll just leave it with this. Thanks for taking time out of your weekend to watch this. And thank you for your support. Take care.